And we're off. Oh man, what a market. God. Oh my goodness. Welcome. This is Bag of Don at Stock Market Caddy, and today is Thursday. I didn't expect to punch up today, but I didn't want you to miss the fun this afternoon. So let me circulate this little short. You never know, so you got to push those like buttons on the YouTube too. By the way, we appreciate that. And you also need to push those notification buttons because you never know when we're going to punch up. And when you do, you'll get to see what we're up to. Right now, it is 12:02 Thursday, February 13th. And we're going to try to get ourselves in position. And we like what we're seeing here. We're not trying to hand out the fish, though, but we are trying to give you a glimpse of how we go about fishing so let me circulate in this little announcement, and and then we'll be here to answer any questions. We have one mini. Now we're not going to give up. We don't want to give up ground. It's Thursday, right? It's Thursday, so we're Thursday to Thursday. We're to the good on this one market, on this one view, right? We trade multiple markets. We trade options, right? So, but we like to keep it consistent. Here on YouTube, we trade the Nasdaq because if you can trade the Nasdaq, if you haven't figured it out yet, it is the crazy aunt in the basement. We got a few crazies. We got some aunts and whatever, but every family's got them, right? So it is the crazy aunt in the basement, and if you can trade that Nasdaq or this Nasdaq, you can trade just about anything. And if you are getting it done with whatever it is you're doing, keep doing it. Please keep doing it. But if you're not, check us out. I'll be back in a little bit. Let you watch. Let's circulate this announcement that we are now live. Good afternoon. Good afternoon, everyone. And once again, I'm Bagadon at Stock Market Caddy. It is February 13th at about noon, and we're giving you a view of Swing Machine. And we have just gone in mechanically here. We're going to try to see if we can catch what we think is the start of maybe a 5 minute counter trade. And we'll see if we can ease into something a little bit larger. And so we wanted to give you a view. We'll see how we do. We don't want to give back too much of our weekly gain because why? It's Thursday, it's late in the week, and Bag is not going to be trading tomorrow, unless we have a nice big fat profit. In that case, then I'll get the machinery to take it over, and then we just got to make sure the electric stays on and the internet stays up, which isn't too tough to do, and we can let the machine handle it, and I can be doing some other things and wrapping up the week and getting ready for next week. If you're getting it done with whatever it is you're doing, keep doing it. If you're not, feel free to explore our website, stockmarketcaddy.com. And we're not like anything else you're going to subscribe to, though. Yeah, we're not, and we're gonna do something that they're not prepared to do, and that is empower you to make your own decisions, trade your own money, be dependent on no one. Not even Bagger, not me. We've had many, many members, blow us away. It's not a zero sum game. Their success does not take away from my success. Of course, they are using a lot of our programs and continue to use them for now several years. And because we have been, Stock Market Caddy came out of the ground conceptually around 2012, right? We didn't set out to build Stock Market Caddy. It just was inevitable, I guess, because trading becomes really so routine, so boring. But I'm going to continue to tweet out where we are and that we're up and kind of spread the word. If you push the notification buttons on your YouTube, when we do punch up, you'll get notified and you'll know. And if you push the like buttons, that helps us with the algorithms. And also too on YouTube, you have a little settings tab, a little video settings tab. I don't know if you realize that or not, down at the bottom. And because we're broadcasting this in 1080p, if you set yours, I think, to auto and or 1080p, you'll get a very, very crisp image. Now there is a little bit of latency. There's a little bit of delay, um, not because of us, more because of YouTube. And so I think that delay is currently about 10 seconds. We are exploring what we might be able to do to shave a second or two off, but to always be, you know, several second delay. So if you're watching real time and you see a quote coming through, you might see a little discrepancy there. Now, that really shouldn't matter because a couple of things. One, we're not doing this for you to be trading from. I hope you're not doing that. So that's not what we're doing. And we're doing this to create some awareness, give you a chance to ask questions and for you just to see and um, and for us to be able to showcase, some of the tools and what's happening with the markets. So that's number one. And number two is if you want no latency, and the latency will be about depending upon well, the number one thing is to have it on your desktop, right? On your desktop. Now, measured in milliseconds, the latency from the exchanges, depending upon where you are in the world and your internet speed, you're looking at probably 400 or 500 milliseconds, 400 or 500 milliseconds, and imperceptible to the eye. It's less than half a second. Now, what we're not doing, and you may have read books about this and so forth, where the real big high frequency firms are, collated right next to the exchange, and they have supercomputers, and they have a latency down to fractions of a millisecond. And trying to front run things. They're not doing it with futures per se, but they might be doing it with options and some of the other stuff. They can get away with that. We're not doing that. We're not, you know, um, and there's only very few. And in that game, when it first came out, I think they were having their way, but technology has been a great equalizer, and that's not probably as lucrative as it once was. They're still doing quite well, but all right. So I don't want to give anyone the impression of that. We will be back. If you have any questions, feel free to put them in the chat room, and I'll try to answer any, and also give you a view on where we think these markets are, where they might be headed, and then again answer any questions. So I'll be back in a moment or two. Once again, we'll say good afternoon. Good afternoon to folks that might be passing by. They might pass by. We had a few phone calls the last couple of days from a number of folks from around the world, and we always thank you for reaching out. And also too, these videos go up on YouTube, and sometimes people aren't able to see it in a live environment instantaneously, virtually instantaneously, and they come by at a later date. And if that's you, don't hesitate to visit the website and explore. And if you have any questions about who we are not, don't hesitate to send us an email. And from there, if you want to have a private conversation, we can always connect. Um, my phone number is, I'll give you a real person with a real phone number, is 813-758-8263. 813-758-8263. And yeah, I'll take your call any day from 9 a.m. to 9 p.m. If I'm on another call or unable to take it, just leave me a message. You can leave me a date and a time. Just give me two. Usually, I can accommodate one. I can always text you back and let you know when I could speak with you. I would just ask, if you don't mind, in the interest of trying to maximize everyone's time, that you have at least looked at the website, and because I think many of your questions will be answered there, but maybe not all. And we do refresh the websites every couple of years, and I'm looking forward to doing that. And we're going to be refreshing. We actually have two websites. We have what we call it. One is a marketing website, and we're in the process. That's going to be overhauled. And then we have a members website that is relatively new in the last couple of years. And that's where our base members and then our annual members can go and access some of our other tools. We break it up that way so that that the because they really serve two different purposes. And if we try to put everything on one website, then it can slow down the experience. And so folks that are passing by, and want to see just what we're about, we don't slow the connection down. We actually use a service out of Germany, believe it or not, and um, that hosts um, uh, the website, a company called SiteGround, that is excellent. And then we even use some of the other tools that we use. We have a video service with a company that is superb. They're out of Manhattan. out of New York, and then we're also this is now coming to you through StreamYard, and we're probably very, very close, probably the next month or so, of eliminating Zoom, and we're probably going to be using StreamYard. We really like what it's doing, how we're able to use it, and it helps us maximize that time. So definitely let us know. Um, if you are a member, and we never know, right? When folks are passing by on YouTube, it actually very well could be a member or two. It could be a base member. It could be an annual member. Let me just always remind everybody, we have, when it comes to our membership, monthly members, we have an unlimited number, right? Anybody and everybody can sign up as a monthly member. I can't possibly know or appreciate um, each person's level of experience, and know exactly, their what it is they're trading, what their interests are. There's just too many folks. um but by the same token, though, if you have specific questions, as a monthly member, don't hesitate to reach out to us, and we'll try to help you maximize the tools that we're showing, and we always want to get better as well. So don't hesitate. Our retention, and this is how we grade ourselves. The retention, our monthly or base membership is month to month. There are no, we don't do any like 6 month deals, or it's the 4th of July, sign up for a year. We don't do that. It's month to month, and so we've got to make sure that we're providing a value, or presumably folks won't stay, and our retention level is very, very high on the monthly level. It's about 90%. The second level of membership is what we call an annual membership, and the annual membership is for that person or persons that want to have these tools on their desktop, so that there's no delay, there's no latency. They can plug in what they want to plug in. They can plug in the intervals that they want to plug in, not just swing machine, but indicators and other radars and strategies, these trading robots, just a plethora of tools. But before you can do that, we won't let anyone sign up. Um, and we've had instances where folks have tried to do that, and we had to send them their money back. You have to go through once what we call the Q school, and we know it slows the process down, but we think it's a good thing. And it's a 3 week Q school. We have on-demand videos, about 25 hours, and then we want to spend about 1 to 2 hours a day with you for a 3 week period. It's a big commitment on your part. It's a big commitment on my part. And but we want to make sure, in a live environment, one-on-one, not in a classroom of 30 people, that you have a chance to ask your questions. At the end of that Q school, you're going to have a really, really good idea who we are, what we're about, what these tools are. Many of them, can't possibly use them all, but many of them. And if you've had TradeStation, we can actually send you some of those tools. And then toward the end, you're going to know. And if you want to become an annual member at that point, we're going to credit you back 30% of what you spent, which is $1,000, and then you become an annual member. And then it takes us about a week, and we're going to send you all the tools. At that point, you most certainly need and want to have TradeStation, because they will only work on TradeStation. And from there, you're underway. You still have currently a live Zoom feed. Um, we're not handing out the fish. The Q school doesn't continue. It's not an apprenticeship. It's a mentorship, because you'll be underway. But it's not like we're not reachable. We're readily available. Um, the second year, you don't ever have to go through Q school again. You've made that investment. You're done with that. And the second year, the annual membership is $3,500, and we're going to give you 1 month free for the first year and 1 month free for the second year. And we're going to do that up to six. And so we have a number of members, and they've been with us for several years now. So their annual membership, they're a base member, they are a base member, but their annual membership is $3,500. But because they've been with us so long, their effective cost is 1750. So our the philosophy here is that what we want to do is keep your cost fixed to down, deflationary. It's a little bit reversed, and keep increasing the value. So we're keeping your costs fixed to down while increasing value, and it's really worked. I don't know. Maybe other companies do it that way. I don't think so, but we do, and it really works. And Stock Market Caddy has become its own little company. It's amazing, and we've grown over the last 4 to 5 years. We're growing at about a 50% clip. That's as fast as we can grow. We don't want to grow any faster, quite frankly. It's never going to be thousands and thousands of people. I don't think so. um, I like the where it is, and I like where we're headed, and by controlling its growth, we can manage what we have and still have a lot of fun doing it. So that's a little bit of who we are, what we're about. I just take a minute. We're going to be back in about 5 minutes, 5 to 10 minutes, and we'll answer any other questions you have, and also talk about these markets where we think they might be headed. Hola, Joseph, Brazil. Hello, hello, hello. I had to step away for a moment or two, and good to see you. And folks that are stopping by, I don't have visibility, so I don't know who you are. That could be a good thing. But wherever you be, if you are coming by for the first time and you have questions about who we are, what we're about, you ask. That's why we punch up. If you have questions about the market, questions about trading, you know, Don, can I make money intraday trading? It depends on a number of things. What markets are you trading? You know, and how much, what kind of returns can I expect, and that sort of thing. If you got questions about that, feel free, and I will do my best to answer you from where I sit. Having been doing this now for, well, I ain't going to tell you the number of years, but a whole bunch of years. And I had a previous gig though. I'm not from Wall Street. I'm not from Madison Avenue. Thank God. And I didn't work for a bank, and I didn't work for a broker. Nothing against them, but I didn't. Thank God. Um, I was wearing a surgical mask for 20, 25 years before they were fashionable, and learned some things there. But I was always interested around the markets, and I also subscribed and was educated with all the crap. Right, made all the mistakes that get repeated. I made a lot of them, and hopefully learn from those mistakes. In the early 2000s, Susan and I set out to take control over this part of our life. We made a lot of mistakes. Okay, it wasn't perfect. It didn't, nobody was there to say, hey, go this way, go that way, do this, do that. There wasn't. In fact, we had a lot of people, so-called professional people, saying, you're a fool, you shouldn't do it that way. um, thank God, thank God we plowed ahead, thank God. um, when I think back on it now, Stock Market Caddy came about after the fact, and we in social media was getting better and better, and Twitter was coming out of the ground. I said, I wonder if there's a gentleman in Brazil. I wonder if there's a person in Singapore. I wonder if there's a person in the Netherlands. I wonder if there's a person in Germany or in other parts of the States and other parts of the world that would like to know the lessons that we've learned and might benefit from the tools that we have. That was the idea. That was the concept. But the concept was to share them, all of them, not one or two, all of them, not sell an individual anything. Because when you sell an individual trading tool or an individual trading robot, an individual tool, the expectation that I would have if I was faced with buying something, right? Somebody is hawking a singular program, and he wants $5,000 for that program, or 10,000. There's some that want 10, 15,000. If I'm going to buy that program, I have an expectation of that program producing for me, that I can recoup that money and more. Now, what I know, what I will share with you, there is one program, no one program that is going to do that for you day in, day out, market in, market out, from market to market to market. It does not exist. It doesn't. That's why we have dozens and dozens of programs. Think about it like a football game. So, the analogy, I'm going to jump the shark here from golf to football. You're a football coach. You're going into the Super Bowl. You're going to play the Philadelphia Eagles. And your game plan is to pass over the middle. I don't even know what their strategy was, right? So I don't watch the NFL, but I understand one of them got their ass kicked. Kansas City. But they had a game plan. Well, the Eagles had a game plan too. And the one whose game plan isn't working is going to have to modify or they're going to get run over. You can't control the other side, what they're doing. You can only control what you're doing. The market, the market is going to do what the market's going to do. And we don't have control over it. Do you notice on this image you're seeing um, on YouTube? Do you see the blue things up at the top, down the bottom? Do you see them moving? They're like a wave, right? They're a wave. We did that on purpose because the market is like a wave. It waves in, it waves out, right? But, Aaron Burnett on CNN or the other little nitwit on one of the other stations or something, they, believe it or not, they will attach meaning to the market, right? They will end their headlines. The market did such and such today because Trump said this, Trump said that, or this or that, and people will gobble that up like it's garbage. They don't have a clue. They don't have a clue, and the market, it will wave in, it will wave out. And every once in a while, it might be it might have been the timing of a news announcement or something like that. But what you don't know is, do you ever think of the fact that maybe the hedge funds knew that a story was coming out and they got themselves in position, and then the story comes out and they juice it and the market runs and then they dump into it and it reverses? Ever think they would? Do you think those guys would do shit like that? You think so? With their billions and billions of dollars. I mean, look at what everything else we're learning, right? So we won't go down that road. We're all seeing and hearing about it. I've always said that it's a lot worse than we ever thought. But the markets have been this way not for the last 5 years. It isn't AI. I mean, it is AI, but it hasn't been the last 5 years. It hasn't been the last 10 years. It's been the last 40 years. Jim Simons, the most successful investor of all. Look him up. Jim Simons, Renaissance Capital. Watch every video you can because he has since passed away. He won't give you the secret sauce, but he will. He's the only person that I can say you can listen to in that I just identify. I'm not Jim Simons. I'm not going to have a Renaissance Capital. At least I don't think so. Um, and but I when I listen to him speak, I'm like, I totally get it. He's the most successful quant investor trader ever, ever. He started when he was 41 years old. He was a math guy. He worked for the NSA and everything else, and he dwarfs in comparison. If you see some of the comparisons, you could probably Google who had a better performance, Jim Simons or Warren Buffett. Oh, no comparison. Zero. I mean, his percent of return is like 35,000%. It's ridiculous. And there's an interview between Warren Buffett and his sidekick there, Charlie Munger, talking about Jim Simons, and someone asked them about it. Now, that guy who is Warren Buffett's sidekick, he was one cantankerous, outspoken, dude, right? He's also since passed, but he wouldn't shy away from saying, something is crap. And I did see an interview and he's talking about Jim Simons and he said, the guy's really, really good. Yes, he's really, really good. He goes, now I'm not exactly sure of everything that he's doing, and he's not doing what we're doing, but he's the real deal. He said, but one thing that Jim Simons can't do that we can do is Jim Simons can't apply his quant to extended investments. And I get that. I get that. And Jim Simons agrees with that. He says it. And also, Jim Simons also said he could only get so big, right? Because he couldn't be bigger than the market, right? He could only, now big is big. I mean, it still was in the billions of dollars. And Renaissance Capital in 1995 went private. You can't get your money in there. The only people who have money in Renaissance Capital is employees and friends and family of Renaissance Capital. They got the keys and they're not letting anyone in. We also got some keys, but we're going to let you in, but we're only going to let certain people in. It's limited, but you're going to do your own thing, right? So we're not making collective buy and sell decisions. So we're not Renaissance. We're not a capital asset gathering company. I don't want to give anyone that impression, but you could do your own thing. You could run your own, personal. The way Susan and I look at it is like this is our own personal hedge fund. These are our dollars that we have saved, and it's our risk capital, and we're, for all intents and purposes, running our own private, not a solicitation, a private, hedge fund. That's our mentality on this thing. But what he was saying was is that the things that Jim Simons was doing, it was intraday, intra evening, was intraday. They were very, very small bites, and that's different. That is different. Now we can use our tools to go further out. We can. We can use our tools to invest, which would be beyond a year. We can. Um, and um, and when we go further out, we reduce our leverage, right? Right. So we don't increase the leverage. Now I have been asked, Don, if you had, or you were responsible, which I'm not, and which I don't have, 5 or $10 billion, would you trade this way? And the truth of the matter is, I don't know what we could get away with. I don't know. He didn't say, Jim Simons didn't say what that number was, how big, but he did say it could only be so big. So I don't know. That I think what would have to happen is, well, one, the computers would have to be bigger and faster, and you'd have to have teams and teams of people, not teams and teams, but to run things. But I also think that, like Warren Buffett, who is responsible for billions and billions of dollars, that you're gonna probably have to invest, um, because it's just so large, right? It's like, um, so we have here, and you have, if unless you have, if you have billions, um, you know, but if you don't, you shouldn't despair. You have a huge advantage, and we have a huge advantage, right? Because we can make decisions right now, and the markets are highly liquid for us, right? No big deal. We can move in, any number of contracts. My comfortable level is one mini contract. It's just keep it simple. Will I sometimes add? Yeah, sometimes. Will I sometimes use micros? You saw us yesterday use some micros and we could scale in, scale out. Yeah, sure. Sure. So you have a huge advantage. Now the big boys, they're not going to encourage you to do that. They don't want you around. They don't want you doing that to them. They don't want you. They want your money. They want your assets. And if you have a chance to invest some monies with Warren Buffett, or you go into this thing, fine. I wouldn't preach against it. But by the same token, if you want to learn to trade your own game with a portion of your assets, um, you know, let me put it this way. I'm not going to say that you should or shouldn't. I'm not going to do that. But I am going to say that it better be something that you really, really want to do. Number one, right? You got to really, really want to do this. It's got to be in your blood. It's got to be just something that you really, really want to do. So, and I've mentioned this before. I had a gentleman call one time. He was from, I think it was from Europe, and he just said, "Well, I was kind of get to know him, he was thinking about the Q school, and I actually talked him out of it because he I said, "Is this something you really, really want to do?" And he's not really. And I said, "Oh, okay. Well, why are you doing it then?" He goes, "Well, I just want to make $100,000 so that he had another investment or another something else that he wanted to do." And I honestly, I forget what it was. It may have been real estate. It may have been a business. I don't know what it was now. I can't recall. But my point was to him, I said, "Well, you know what? I don't think this is an easy way to just go make some mad money. And if I were you, I would pursue that dream of what you are most passionate about. Maybe you don't have the money yet to do it, but go find a way to get that money by, you know, working for somebody that is doing it and get into that business. Get into it somehow, some way, because you'll learn and make your money that way and pursue the passion." And he's like, "Okay, you know what? I think I'll do that." And I think subsequently he sent us a note, and he didn't do it. So I don't say that that everyone should do this. And I'm not saying that, if you do this, you're going to go have a vacation home up on the St. Lawrence River and blue sky people that. I mean, um, the money is a byproduct, right? The money is a byproduct. That makes sense. I hope so. Being just brutally honest, because the reason why you want to have the passion part, because there are going to be days like today, and I think we're going to have a very nice afternoon here. And we've had a nice run this week, last week. This is again just one view, one market. We got multiple markets. The markets have been beautiful, absolutely beautiful. You know, relatively low volatility. We're swinging one way, we're going the other, we're extracting our cash flow. It's just great. And but there are times when you're going to get tested, like everything in life. And um and, and and you better be doing something you want to do when you get tested, because that will get you through. That'll get you through. And see, I can provide you the education, I can provide you the tools, but I can't give you the confidence. I can't do that. And the way you get confidence, though, is by successfully executing a plan, a program, and doing it over and over again. And what comes from that is self-esteem, confidence. The other people that you might be subscribing to, they're not really interested in that for you. They want you to subscribe to them, and then they're going to give you X number of trades, and then they want you to be dependent on them for those trades, and but you're not going to get any self-confidence really in you. I want you to have that. I want you to get it. And that's where we're very, very different. And but we're happy to show you. Let's take a peek at where we think they are, right? Let's go over and look at a couple of other tools, right? And this is just one tool, right? This is just one. But let's go look at the ES chart on the Rinko. This is it. This is all we've done, right? You've seen this now quite a few times, those of you that have been by before. Let's mark it up a little bit. Let me get a marker. Now, if you let's just kind of highlight this. Let me get a pen. So this is Sunday to Monday 2 weeks ago, 1 week ago, and then this was this past week we did that, right? And then this was a run up, run back, counted the whole week. And then this thing did that, came back up the whole week. And then all we've done is we couldn't break down, and then we just come back here. And I mean, you can see it's just getting really, really tight, right? Now, if you bought down here, if you came into the market for the very first time ever, and you came in and your accounts, nice and rich, but now you're like, it's 2 weeks, you haven't done anything. You know? That's the buy and hold guy, right? But if you can make money as we did on the way down and make a little bit of money on the way up and make a little bit of money on the way down and make a little bit of money on the way up and make a little bit of money on the way down and make a little bit of money on the way up. Well, the market hasn't gone anyplace, but hopefully your equity curve has done something like this, it's just kind of going that way. And so your equity curve can be going up. What's your equity curve? Your account balance as the market goes sideways. Beautiful. I'm not frustrated. No. Mm-mm. The people who are frustrated who buy and hold and just want to see the market go up and make new highs every week. Well, the last 3 weeks hasn't not made a new high, hasn't made a new low. It's going sideways. And markets will go sideways like 70% of the time. And for traders, it's phenomenal that know what they're doing. It's great. From 1966 to 1981, the S&P closed where it started. It went sideways for 16 years. So if some guy was, 50 years old, you know, um, in 1966, and he put his money in the S&P when he was 70, it was where it was. I mean, he got dividends, but it was where it was, where it started. It went no place. What if we go sideways for the next 20 years? How old are you? Where are you? It's not obligated to go to, the S&P isn't obligated to go to 30,000 just because you're in. I mean, what if it goes to 2,000? What if it goes to 3,000? What if it just goes from 6,000 to 3,000 to 6,000 to 3,000, 3,000 to 6, and just goes back and forth and back? Bank's going to be making a ton of money. Elon Musk's going to make a ton of money. Everyone's going to be, traders are going to make a ton of money. But if you're a buy and hold, you're done. Oh, well, that's really, where are you from, Devin Yash? Is that's a nice comment. Devanyash, this is some live stream that should be watched. Well, thank you. We appreciate the like buttons. That helps us with the algos. Is it a bot you're using? Yep. Yep. There's another question. Is it a bot? Thanks. And yeah, there you go. Get you some publicity. Um, well, we have, tons of bots. What he means is a robot. Yep. Yep, most of it. I'd say at this point, 80 to 85% of all of our tools. We have about 70 tools, algorithms, and for the most part, they're from both Susan and I. However, some of the tools have now come back to us, right? And something that's happened with Stock Market Caddy that we did not appreciate was going to happen was that it made us better because people come in and they have different experiences, different perspectives, and they're doing the same thing we're doing day in and day out. And then they start coming up with ideas. They start asking us questions. And then what we want to do, if they can write down their what they're doing in English or in steps, then we will begin to program it. And then if we can program it, we can backtest it, we can run it things from there. Bear with me a minute. And we can do that. So we learn. So when you ask about our bots, let me just share with you on the screen, and I'm just going to remove this here a little bit. And then we'll kind of give folks a little bit of a view here. Let me get this marker. Let me back it up. Let me erase some of this. So when you're looking at this screen, this is a bot, right? Yeah, it's actually the brokerage that we use. This platform is from TradeStation, and you do want to get Trace. Whatever you do, you want to get TradeStation. They're out of Plantation, Florida. They're owned by Mitsubishi Bank, I believe, out of Japan, and they're phenomenal. They're phenomenal. So, not to say anything, I'm not going to say anything poorly about anybody, but they're phenomenal. And I don't have any relationship with them other than just being a super happy customer. I come from a surgery background, and I like to say that they are a surgical tool for trading. Tremendous. And all of our programs are built for TradeStation because they have things, they have their own coding language that we can use. They have some tools that nobody else has. And oh, it's great. It's great. I mean, and they just keep getting better. And I really look forward to Saturdays because and every week because there's still things they also just keep expanding and the education, even though we've been doing this like for 20 years, it just keeps growing. So it's like if you like to do puzzles, you like to be challenged, you like to read, you are a critical thinker, this is trading for the critical thinker. If you want to just, you know, buy some options here or there, you can get on Robinhood and, buy and sell some options. There's nothing wrong with that. That's okay. But we like to do this and it's very rewarding. Um, and they're great. But but this is an algo. You see this here, this tool here, this is an algo. And it will actually, it'll talk to us. You might favor the long side. You might favor the short side. This one here, it's hard to see because I got this written on it, but under accumulation, it'll also say under distribution. These markers here are what we call ball markers. That is a specialized algo. We can do all sorts of things with those. They're beautiful. So I'm not drawing those. I don't have the time to do that. And then these things, this is a C point down. This is a C point up, C point down. And they're beautiful. And they are algos. And they are in on these algos, as you see them, they're indicators or studies, one and the same. An indicator, a study is one and the same. They're showing you something on the screen that you can see and you could affect trades from. However, you can also write strategies or robots. We call them robots. And we can write them original code. So some of the other programs or platforms, they're kind of toyish. You got to plug this in, plug that in. We can come in and write our own stuff. It gives us so much more versatility. We can do some incredible things. But I do want to show you uh, as an example. Now, you want to see that the time is here. This is not a time dependent chart, but let's beat up on this for a minute and show you the time. So that's December 19th. This C point right here down. That is, see the date? December 19th. Now, this sell dot, let me show you. I'm going to get a marker again. This sell dot right here, it showed up when this brick right here opened, the top of this one. When that opened, that showed up. So if you wanted to play, I love showing this because it's so simple. Could you have made Divyanish with a Boston accent, if I'm pronouncing it right? Divyanish. Could you have made $1,000? Yes, right? Because we can validate that. You could have. Here's one here. It would have shown up right here. Could you have made $1,000? Yes. How about here? Yes. How about here? Yes. How about here? Yes. 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 How many? One, two, three, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. 18 trades in a row since December 19th, 18 grand, and you won on every single one. Now, when you put that trade on, you have to have a stop loss of $2,100. Right. So if it's wrong, and there will be some that are wrong, you got to be prepared to lose 2,100. But it's a great way to go. How would you have made profit in the real zone when the trade is in a loss? You mark 3 on the red line. Let's see. How would you have made profit in the red zone when the trade is in loss? You mean when it's going down? I think it is asking in a loss. Uh, um, um, I think that's what you're asking. You mark 3. So we make money when the market's going up. We make money when the market's going down, right? Yeah. Yep. So yeah, I get it. So as an example, so Devyanish is asking this. Let me highlight this. This is a question. How would you have made a profit in the red zone when the trade is in a loss? You marked 3 on the red line. So he's asking is, well, I understand when the prices are going up, I can make money, but how is it when the prices are going down, I can make money, right? Well, that's because, see, prices really don't go sideways. Time does, and these charts are going there. Prices go up. Let's do this. Oops. Um, so prices, you buy here. Oops, sorry. You buy here, and the price goes up, right? You buy it here, and then you sell it up here, and you capture the profit. That you get. But what he's asking is, well, what happens if I buy here and the price goes down? Why don't I lose? Well, because what we do here you may be buying, you buy here and you make money when you go up and you sell it over here and you capture the profit, right? And you make money. Over here, rather than push when it's going down, you don't push the buy button. No, you push the short button. What? Yeah, you short. And when you enter short, you're obligated. The market's dumping here. We may have the Fed minutes coming out, usually around this hour. Maybe. Today's no, today's Thursday. Something just moved the market. Did you see that jump? Um, so when you short, you're short here, and then when the market goes down, what do? You buy it. Right? This is not color, and you capture the profit, and you make money on the way down. See, that's what hedge funds do. They make money when the market goes up, they make money when the market goes down. So that's why we don't really give a crap how high the market goes or how low the market goes. Who cares? We're traders. We buy low, we sell high. We sell high, we buy low. And we use machinery to do it, which is legal in some countries. Devyanish, I don't know what part of the world you're in, but if you're in India, I don't think TradeStation is available to you in India. I don't think so. If you are, I don't know. But it is available in Germany. It is available in Singapore. It is available in the Netherlands. It is available because we have members in those countries. It isn't available in Canada, at least not yet. Where are you? So you want to research that. Yeah. Um, so, but that, we'll erase this. And this is just one of the tools. So I'm going to erase all those little markers if you don't mind. Let me back them off as an example. But it would be extremely tedious sitting here over a period of 3 or 4 months, unless you're reading a book, listening to some music. Yeah. Um, so we get this question a lot. Um, is it a type of HFT? I'm going to answer that. We get that question a lot. I think there's a lot of misunderstanding what HFT is, what it isn't. I'll explain. But and we'll erase this. But it would be very tedious sitting around waiting for these trades. So we can program the computer to put the trades in automatically. Feel that confident. Did 18 in a row. I'd be very comfortable with it, putting them in, taking them out. The frustrating part would be that you left a lot of money on the table. You would have left a lot of money on the table on some of these trades. But but by coming out, you also are controlling your risk because time in the market, time in the market is a risk. So if you can limit your time in the market, you can, theoretically mitigate your risk. You can't eliminate risk. Now, of course, the banks want you in there all the time. The financial community want you in there all the time. Of course they do, right? Because they need to be able to get out when they want to get out. And they need liquidity to get out. They need everyone else in. That's the reality of it. So let's go back here. Let's take a peek here. And so here is the 5 minutes. She's just trying to get short now. And but something's going on here. Take right at noon. Look at the VIX on a 5 minute. The VIX starts heading up. And the VIX tells us options market is getting defensive. And the options market is what's driving price. The banks play in the futures because they move in and move out, but it's the options market. So something went off at noon. That was about an hour and a half ago. And then notice the ES is trying to get short right here at 125. The 5 minute on the NQ went short at 120. It's drawing down a little bit, but we got in a little bit earlier. In the trade that we put on up there, we put on it mechanically because we felt pretty good that we were gonna, for other reasons, we got other view. So the question is about this HFT. And I'm going to try to answer this real briefly. We're not an HFT. We're not. What is HFT? It's a high frequency trader. They're firms. They're firms. Prior to 2008, brokerages that sold you 1,000 shares of Apple were obligated to make a market for their customers. Meaning, if you bought 1,000 shares of Apple from them at 10 o'clock in the morning, and you turned around at 2 in the afternoon when Apple was falling, and you want out and you say sell, that brokerage was obligated to make a market to take those shares off of your hands and then do with them what they want. They carry them or enter the market and do it. When they did that, and they were forced to do that by the government, that there's risk in that, and that's why they charged commissions. After 2008, after the crisis of 2008, they changed a lot of different things, and lo and behold, and we could see this happening, and this is a longer story here, but basically what came out of the ground, I'll answer that. And what came out of the ground were what we call high frequency firms. And the high frequency firms are just big computer banks collated right next door to the exchanges up in New York or Chicago. And the brokerages what they were doing was selling their order flow to the high frequency firms, and they were being paid for that, and basically offloading that risk. And that's why in time the brokerages didn't even have to charge commissions. So the high frequency firms are getting, so if someone pushes a button and buys 1,000 shares of Apple someplace, they may think it's going to the brokerage, but it's done by computers measured in milliseconds. Yeah, the order will track to a high frequency firm. They'll front run it. They'll shave pennies, and they'll make their money, and the order will go in, and the person at home or wherever, they don't see it, they don't feel it. It's the old proverb, if a tree falls in the forest, doesn't make a noise. It does, but if they don't see it, don't hear it, they don't know. But there's also some advantages to it too. It's not necessarily a bad thing. It provides extreme liquidity. It also tamps down the volatility. And so there's a lot of, good things. I don't want to say that it's necessarily a bad thing. However, we're not an HFT. We don't have programs that are HFT. We don't have the order flow, right? You would have to be a firm. You would have to, so that isn't it. However, that said, we do have programs that you can control the frequency of trading, meaning the speed of the trading. And you can do that as the coach of the team. You can run plays very, very quickly or very, very slowly. You can do that. I do want to dispel, though, the notion that retail traders or people who haven't been doing this a while have it in their mind. And I can speak to this because I had it in my mind that if I could trade really, really fast and really, really small, I could eliminate the risk. And you can't do that. I've tried. Trust me, you can't do it. And now, if you got the order flow, yeah, you can do it. And if you can do that, you're going to be a billionaire many times over. You're going to be Ken Griffin and Citadel, and you're going to have, five or six $500 million homes all over the country, and you're going to be wired. But most people don't have that. What what we found out, what most of our members find out in short order is um, slowing down and adjusting your risk accordingly is probably a better route to go. But sometimes what'll happen is, the faster the market gets, the slower we'll go, or sometimes the slower. So it really depends, on the pace of play, right? So just like a football game, just like a golf round, and if you're in control, if you understand what it is you're doing and you understand the programs, then you're going to be in a much better position. I won't be making those decisions for you day in and day out on 5 to 7 different markets because I can't do that, right? I can't even do that for Susan. Susan's got to do that. In your X number of years, what is the best global broker that supports external programs such as your own? Well, this is a couple of questions here, and I'll just why did you choose TradeStation when you had the options such as Binance, TradeView? Well, those are all fine. I know TradeView. I've seen TradeView. I don't subscribe to it. Um, but and it's fine. But I don't use it, and I don't use Binance. I do have other brokerages though that we use, but I'm not going to name them. Um, but I do. The only one I'll name is TradeStation, and the reason why we use TradeStation is because um, it's so sophisticated and it's so good, and they have their own easy language, coding language, and it's the most, in my view, the most versatile one that we can do incredible things with. They're the only ones that have this product called Radar Screen. So, and by the way, we're not using moving averages, we're not using stochastics. The code for Swing Machine Plus is operating on TradeStation's proprietary tool called Radar Screen. It's the only one. They're the only one that has that. There's 800 lines of code for this original code. We couldn't do that with TradingView or Binance. We couldn't do it, or any of them. Um, and then this question again. I'm just going to come back. What is the best global broker? I'm going to say TradeStation, but it's unfortunately it's just not. It is global, but some countries don't allow it. Maybe it's just too damn smart. Maybe it's just too damn good. Um, I don't know. I don't know what that is. I don't know what that's about. But I imagine they're in business. They want to do business. Okay, I'm going to take a quick break. I will be back at the top of the hour. We're going to let this run, and I will be back in about 30 minutes. At 2 o'clock, we will need to turn down, but I'll answer some of your questions then. But we're going to let you watch. I encourage you to visit the website. If you got questions, feel free to give us an email or two. And Divyan, thanks, and we'll let you watch. To be honest, I don't know if you're still there or not. I don't want to, speak to it because I don't know, right? I don't. From country to country and things change. Um, I don't know, but it is something you'd want to research. I'm sorry. I have two microphones, and I had the wrong mic open. Um, Something's going on. Something just came out. It could be, I mean, I think Trump's making a lot of noise lately. I mean, it may be a Ukrainian Russian deal. Maybe I think that's in the offering. But you're seeing some market orders just flying through here. When a market moves really, really fast like this, even at a 5 minute level, um, it's difficult for the trend to get on it. It ultimately will catch the trend, right? If you want to be trading, if you know when an event is going to come through, you don't always know, but sometimes you know. Um, Again, I don't know today. I was thinking today's Thursday, so usually Fed minutes come out on Wednesday, so I don't think it's a Fed minutes thing. But we do have programs to trade that violence of markets up and down, and you can do it day in and day out too. Um, but it was pretty violent here. We could see, the and those are market orders, by machine as well in the aggregate. So, but again, we're only going to be here up until about 2 o'clock, and we've had a very nice week, right? This trading session, we're calling it a weekly trading session. Normally, it starts on Sunday night. We usually start with a beginning balance of about 30,000. This one started on Thursday of last week, so it's been 1 week, 30,000 NQ, only the NQ. Um, no more than one mini. Nope, just one mini. There were a few trades there that we put in, a couple of micros, and we've had a decent week. We're to the good, almost $6,000 in one market. We had a profit factor before this trade. If we were in to be a little bit higher, running at about 3.6, meaning we were making $3.60 for every dollar we expended. We weren't in the market a whole lot, but and it was a mixture. Some of the trades were robotic, some of them were mechanical, meaning I put them on. But this thing is really moving, so there's something out there, right? We can see it, and you can see on the VIX too. The VIX is dipping. It's almost like this market is going through its almost feels like it's going through its death throes. Let's go look at the ES. Let's see what's going on over here on this. This will slow it down. You can see it right in here, right? So if it clears this, then she's going to make a run up here. And if it does clear this, if it does, which is 61.45, if it does clear 61.45, there it could shoot up in here, because anybody who got short Anybody short down in here is crying. Anyone short here is just frustrated to no end. The problem is anybody who bought over here is frustrated. Anyone who bought over here is frustrated. And here they meet in the middle and they're just hammering, machines are just hammering each other, trying to decide which way are we going. Near term, this is still favoring up, but and that's the thing that as a trader, you have to decide. I can't do this. Thanks, Ken. Oh, he's going to have a news conference on tariffs. Ken's letting us know. So, and that's going to be, I like it, I lump it. Um, this is going to be the next 4 years. This dude is going to be, you know, he's going to be on every day. This is not going to stop. And it was this way with his first term, but it's going to be even worse or better, whatever your perspective is. It's going to be every day. I think it's great. I love the volatility. I love the action, and we do have other tools to trade it. So I hope you're all in one piece. We're gonna stay pat here, but it looks like and then of course he's gonna have friends and family gonna probably have some of those announcements and whatnot in front of them. Um, Impossible to know. And probably impossible to know, from one day to the next. He probably doesn't know exactly where he's going or what he's saying. So impossible to try to trade off the noise, the news. We don't, but it could be that. Probably is, and we're gonna sit pat. But we're not gonna let anything do any damage. Today is Thursday, right? And I want to take Friday off. We usually do. Now, it's not to say that we don't punch up and give you a view, but I don't want to be trading tomorrow unless all hell breaks loose and I have huge profits this afternoon that I can lock in with the machine, and then I might let the position run. But this would be too skinny, only up 200-300. I won't do that. So we'll see what happens. But I'm not going to give back on Thursday. I'm not going to give back our profits. I'm not going to let that happen. If I'm in let's compare it to a round of golf. If you are, it's only on the third hole, and you have your score, your partner, or whatever game you're playing. You have plenty of time. If you get a bogey, you got plenty of time to get the bogey back, or even a double bogey. But if you got a decent score going and you're on the 15th, 16th hole, I, you know, I don't know about you, but I don't really want to be taking, any too many wild ass, chances, right? I don't want to destroy, a nice day out on the golf course. So, we've had a really nice weekly trading session. It's nice. One market, one mini. Again, we have other markets that we don't show. Um, we trade options and sometimes we show, but we have other things that we're doing, but we keep this here so that you can kind of follow along, see what he's doing. And we don't always have a profitable day. We don't always have a profitable week, but it's been really, really sweet, right? Um, and we do have a weekly plan. We do have a daily plan. We do share that plan with our members. And we do share that with the Q School. And you can adopt that plan. And what's nice about it is it's a general plan. Look at this thing. This thing is really, look at it. This is becoming illiquid, right? These. So be careful in here. If you're playing at home, you can see these big gaps becoming very illiquid. So it's and what does that is the market orders. So Swing Machine will struggle here. So just know you're like, wow, and it isn't a red light, green light system, right? It isn't, it may look like that, but Swing Machine is I'm just kind of watching as well, um, is hard coded, but the market is not hard coded. And so if we get into periods of something like this, we just keep a casual eye on it. But it's really rocking. Let me draw this out. Thank you, Ken. That's probably going to be at 2 o'clock, this news conference. Um, we'll see how we'll have a front row seat here on it. And now I think here, this is what I'm looking at, and this could influence what I do with this trade here. Don't you do anything what I'm doing. Don't try to shadow or anything. That isn't going to do you any good. But this, I'm interested in what the VIX is doing, and the VIX is still long. So I want to see the VIX stay long. It's dipping, but I want to see it stay long. If the VIX starts to sell off, then I'm going to have to cover this trade and get the hell out. Um, Swing machine on the 5 minute NQ is really, violent here. She's trying to get on the trend and it hasn't been in place, so it's up and down. We could drop it to a 1 minute. I don't want to do that, or even a 2 minute. But we do have other programs, right? We can go to point and figure, which is great for up and down action. We can go to classic Rinkos. We got other tools that we could be using and get the machine to trade it. But right now, we're just going to sit tight. But what I don't want to do is I don't want to give back too much ground here. We're on hole number 16, 17 here for the week. And, I don't want to go into the clubhouse, with a triple bogey. That'd be no fun. So I'm a little bit more aware of where I am on the field and where the account is toward the end of the week than maybe I am at the beginning, just like golf, right? So you start out, beautiful day, you're going to tee off. You're not really too worried about your score. You got plenty of time, and you just want to get underway. And that's kind of what we're doing for those of you that play golf. And don't laugh. I'm not that good. I'm not, but now remember, there are, 20. There really, when you're trading futures, there are 24 trading days in a month. Take off one day. Now we're down to 20. So from there, if you are making $100 a day net, that's 2,000 a month. If you are 200, 300, 500, I mean, you can do the math from there. But you have to learn, right? You're not going to be able to go out, buy yourself, $3,000 golf clubs, watch one golf video, go out to a gorgeous golf course in Central Florida, drive up with your knickers and your golf shoes, and say, I'm going to play from the tips today because I really want to see this course, and and break 80 or shoot 70. It's not going to happen. And I hope to God you're not in front of me. And I won't be playing from the tips, but I just don't want to be waiting on you because I don't want to play golf for like 8 hours. Did you see it was on? I thought this was clever. There's a golf course now. And one of the things that has really hurt golf is slow play. Taking 5 and 6 hours to, you don't want to be out there that long. And I don't know why anybody didn't think of this, but I just saw online today a golf course in South Carolina. And instead of putting out golf carts, some people say that golf carts slow the whole round down. Because if you had to walk, you know, some people probably wouldn't play. That maybe shouldn't be playing. But okay, so we're now going into a draw situation. Look at the VIX. I don't like that, and so bear with me here. I'm going to have to make a decision here. I see the VIX is going short here, so I'm going to. Boy, I don't like being thrown off here, but let's just keep a casual eye here. I'm ready to pull the trigger on that. I don't like the VIX turning down. That tells me that the options market, that they're pouring money onto calls, and they will drive the prices higher on all these markets here. So somebody may know something. Maybe he's going to, you know, announce something. Somebody may know something. We'll see. Let's see where we are. So I'm gonna just stay with it just a little bit longer here. But I've drawn down. I'm not gonna beat myself up that I didn't get the 2 grand. It's just another trade. But I don't like this when I'm short. I'm short the market. Swing machine is long. I don't like being against it, and I don't like being against the VIX. So I may have to cover here in a moment, which means that I've put on a short trade. I'm trying to make money on the dark side. I want to sell it high and then buy it lower and capture the profit, but it's not going my way. Now, we can get the machine to do all this too, by the way, right? So I'm not ordinarily doing this, but at the end of the round here, end of the week, I kind of I wanted to do it. So we're right at 2 o'clock here. Let's see what happens here. So what they did at this golf course, though, they came out with carts that are singular, one driver, not two people in a cart, just one. And they found that it's really cutting the pace of play way down. Why? Because if you have two people in a golf cart, yeah, you got fewer golf carts, but player A, shoots the ball to the left, player B shoots the ball to the right. The golf cart's got to drive this way, drive that way, and it slows the whole thing down and slows play down. Whereas if each golfer has their own cart and they're smaller, they're narrow, little narrow carts, um, it's speeding up play and ingenious. You're gonna sell more golf carts, but you're also gonna have quicker play. I think it's a great way to go. Might want to find out who sells those golf carts because they might be selling a bunch of them. Okay, so we're drawing down a little bit. You can see that, the orders, I can just tell, that these are market orders going through. What I wanted to describe, I'm going to try to do this both, but I also want to keep a casual eye. Now, if the machine is running it, I don't have to be as attentive, but I don't have the machine running it. And so I got to be a little more attentive. And I'm going to take the lump, going to get out. Um, Now, what I wanted to say is the code to the swing machine is written in a. Let me do it this way. I think I got a circle here. Do I have it? Bear with me. Yeah, it's written in a circle, and it's hard coded. It's hard coded, and it can go this way, and it can go the other way. It's like the sprocket on your bicycle. It is hard coded. It's very, very sound. It's very versatile and it's very sophisticated, but simple, but sophisticated the same. The problem is, or the challenge is, we are dropping this algorithm on top of the surface of the ocean, and it can get very violent. It can, so that's why I like when the market is not so violent and is relatively flat, and then swing machine can just we just get in and do our thing. So during periods of high volatility, we might decide just to slow it down. But what can happen is the smaller the interval, not so much with a 5 minute, but like with a 1 minute or a tick count, it can miss a sprocket. The market can move so fast it can miss a sprocket or two. And if you're watching it at home and you're trying to red light, green light this thing, that wouldn't be a good idea. That's not what we teach. It isn't. Takes us a couple of days to in service this tool, and it's the first 2 days of Q school usually, first 2 to 3 days, because there's a lot of ways to trade this. But if you're watching at home and you're trying to do it, you're probably doing yourself a disservice. So you're certainly doing the tool a disservice because you haven't really been in service on it. And I can't compress, the the 2 to 3 days that we spend with folks, um, hours to teach them how to use this. But it can miss a sprocket, right? And there isn't anything wrong with the code. There isn't anything wrong with the market. It is what it is. But the market doesn't do that most of the time, right? It's just. But there are going to be these periods with the Trumpster. He's having a blast, isn't he? All right, so so we had to flatten it out. We take a little bit of a lump, but let's just see what we see here. If we get another opportunity, maybe I'll come in. But now, most of the time, similar to what we did the other day, we just have the machine do the trading, so I don't have to make any decisions. I don't have any stress. I let the machine enter, I let the machine come out. If the machine makes money, if the machine loses money, if I do any intervening, it's just to not to reduce the loss, it's just to take a profit. And psychologically, that can be a really great way to go. But you don't want to be, I don't want to, when all four markets, especially on a 5 minute, are all long and the VIX is short, I don't want to be short. So I got to get out, and I'm out. Now, if you had gone long the 5 minute at 8:35 and you stayed long all day, which we weren't, um, you'd be up. If you had one mini, you're up $1,700. If you had 10 minis, you're up 17,000. If you had one micro, you're up 175. If you had five micros, you're up, 850 thereabouts. So you can adjust your leverage. You don't probably want to use the same leverage every single time. I kind of do, but you don't have to. If you are more bullish, you might use, a mini to go long. And then when you get a short signal, maybe you use five micros, that sort of thing. And you adjust. Again, you're the coach of the football team. You're going to come in and run, you may think that's what you're going to do, quarterback sneak, quarterback sneak, quarterback sneak. You're going to run, run, run. Well, maybe, you're going to be a counter trend trader. I'm going to run, 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 run the ball. Well, that might get old after a while. And then, but maybe you get up so many points. Maybe you get up 2, 3 grand and say, I can probably, pass the ball a little bit, 35, 40 yards downfield. Maybe I can get myself on a 5 minute trend and withstand the larger drawdown or the lower win loss ratio by doing that and put even more points on the board as an example, right? So I make these analogies because I don't I don't think about the market in economic terms, right? I'm happy to discuss it, happy to chat about it, happy to read about it, happy to do that, but trading the way we're trading intraday for a few days, it's just a math game. It's just a game, as is any other game. Golf, soccer, football, whatever is your game. And I like sports, so I think of it as a sporting event. And I don't and and if I'm watching, and I don't watch a lot of sports on TV anymore because I got this, but you know, a lot of times I would just turn the volume down anyways. I don't want to listen to, some of those assholes that are on there, right? Some of those guys talking about the game and getting their opinion. I just want to watch the game. So when we're trading the markets, I don't have a TV with CNBC on or some financial. I don't want to listen to that crap. They don't know what the hell they're talking about. Big run here. Let's go take a look at this Renko chart. They're going up after it. They're going to 61. It looks like they want to go to 61.44. And I get news for you. If they clear that, what do we know? There's going to be anybody is short here. Anyone got short here, they're going to cover and they could jam it. They could jam it. And then on top of that, what you'll have happen is today is Thursday. So what happens is, we see this all the time. We like to do it too. Is tomorrow's Friday. It's an options expiration day. What is that? Zero DTE, 0 days to expiration. So everybody says, hey, let's get long the market. And they'll buy themselves a call that expires tomorrow afternoon. Very, very cheap, very inexpensive, and they can get a big hit. Equally, you'll do better on the zero DTEs going long, but you can get, if this market was to turn around and he was about to announce, I don't know, whatever it is, and the market didn't like it, or the market began to sell off really hard here, and you only got one, there's only one more day of the week. Well, then you could get a put on something that's coming back that expires tomorrow afternoon, be very inexpensive, and you could get yourself a nice percentage. We've been doing that for years. We didn't call them zero DTEs. We just called them short, not directionally short, but duration short dated options. Ordinarily, our options are 35 to 45 days, but sometimes we'll do it for a couple of days. Not normally, but you could. Let's go while this is going on. Let's go look at some of the options here. Let's go to our this tab here is our options club selector, and what's showing up today. And we like to place our options at the end of the day. And so we're getting, what is this? This is West Pharmaceutical suggesting a call. Now I wouldn't come rushing out here and just go buy a call. Our members will come here and they'll get their picks, and then they'll go look at a chart, take their time, take a look at it. There's no rush here. And it may be a call. They may decide to buy a call. They may decide to buy shares. They may decide to do what? Sell a put and then buy a put, do a put credit spread. I mean, even though it says buy a call, you can still do whatever you want and wherever you want, right? So if you wanted to do a put credit spread on this stock, you could, sell a put at 200, turn around, take a portion of that premium, buy a put at, 190 or 195. We got lessons on that, but that's could be the idea. But this is where we get them from. And let's go grab this thing and scroll down, and we're looking for something. Now, the other day, if you recall, when we did a live session, we'll have to go see, Tesla was in there, and we were suggesting, getting a call or a directionally long option on Tesla. If anybody did that, let us know. I think it's done pretty well. We'll go look in a minute. How about over on this side? This is on the dark side, and here are the puts, or call credit spreads, on these stocks. I don't know what the hell's got into CVS. The drug stocks have really been hit, drugstores, Walgreens, CVS, but there might be some hedge funds moving in and trying to buy those companies, or private capital. And CVS has been showing up. So here are some trades, as an idea. Now, these are not like for the, intraday. These are not intraday trades. These are 30 to 45 days trades. So they're going to take time. And we'll go back to our intraday. What about Tesla? I'm just kind of curious. Let me just punch in Tesla right here, and let's just punch it in. And if you want me to punch up any stock, Yeah. So here's Tesla. And now this is priced at just one share. And let's put Tesla on an hourly time frame. Okay. So Tesla went short 61 hours ago, was a short signal at 384. Now, if you had gone short that, you per share, you would have got 33 points or 8%. Now, if you got a put on there, you're fat and happy. But the other day, what we were looking at was, where was Tesla? Tesla was not just on an hourly, but I think on a daily, was in a panic sell mode. And that's where we like to get them coming back the other way. So, you could have had Tesla. I think when we said I want to say it was down to like around 310, 315, somewhere around there. As a trade, we'll put this back to an ES, though, ESH 25. But we can use these tools on stocks to affect option trades too, right? But you would be the person to define what you're doing. And if you are listening or following anyone for trades, which we're not giving out, right? That's not what we're doing here, right? And don't mean to offend anybody, but let me get this back up. Um, there we go. You do want to know, if you are following somebody, what if they'll tell you, what is their interval? What are they looking for? What's their price objective before you go plowing any money into it? And they may not know. Right? They may not know. We're teaching our members that go through the Q school, as hard as this is to believe, every time they put a trade on, not only are they putting the trade in, they're putting a profit target in, and they're putting a stop loss in on every single one. And then ultimately the machine will be doing that. But if you're putting trades on, and you don't have a profit objective, and you don't have a stop loss in, I don't know. That wouldn't be so good. What happens is, I have two different mics. I have one on Zoom. We're going to get rid of Zoom, I think, in due time here. And I keep pushing the wrong button. So, so I'm not sure how much of that you heard, but we're going to be signing off here shortly, because I need the screen, and I have to get to other work. Um, but at 155, for whatever reasons, the options market started to get less defensive and more bullish. The ES was already long at 835, and they just added on to it. The NQ, the Nasdaq, at 150 goes long. We were short. We had a nice run up. I didn't get it in the boat. That's okay. I was playing for something more. I was playing for a bigger fish. I felt like I could afford it. We've had a decent week. And I didn't get it. I didn't get that. But I also came out. It's like, okay, we're out. And so maybe someone else did, but at least I'm not drawing down and eroding, the round that I've had. I'm not going to let that happen. Just not going to let it happen. And that was a mechanical trade, and I had to do it myself. But most of the time, the machine would do it, and so I just don't want to go against it. And I'm not asking why, and I'm not. It just is. The golf ball flies so far, the golf ball bounces, the golf ball does this. We don't ask why. It just lands. We look at it, we pick up a club and hit it again. I don't know. Well, if you like fly fishing, sometimes you throw the fly and you swear you're going to catch a fish there and you don't. Then other times you throw it someplace and you're like, I don't think there's anything there. And next thing you know, you got one. Um, so there is some probabilities to this, but these are just tools. The same way that the golf clubs are your tools to play golf, the fly rod is your tool to go fly fishing. The skill saw at Lowe's is your tool to build a staircase. Your cruise control on your airplane is a tool to fly the plane. Just because you have the tools doesn't mean you're going to be successful in any of those endeavors. You need the education, then you need to practice, 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 practice. And it's got to be something you really, really want to do to get you through, the lean times when you don't catch any fish. And then you find out in time, you talk to. And when we spend 3 weeks together, there's a lot of stuff. There's a lot of things that you are just not yet aware of, and we can make you aware. And then there'll be other things, and you're going to make us aware of some things too. So we're going to learn as well. But you want to learn those lessons and be at least exposed to it, before you commit your time, commit your capital, and start pushing contracts around. The brokerages are all fine. We think TradeStation's the best. They got great education, they everything, but there's only, in fairness to them all, there's only so far, right, that they can go. And but we've taken their tools and really, really have pushed the envelope on them, and you can benefit from that. So I can't promise anybody an outcome. I can't. Um, but I can promise you, if you do go through the Q school, we can save you a ton of time. I can tell you you will learn a lot. I can tell you you will have fun. I can tell you that you won't look at the markets the same. You won't. For better or for worse, you won't. No, no. After 3 weeks of that, yeah, no, not at all. And as every day goes by, it doesn't get more difficult. It gets easier. It should. And it should get to a place where it's ridiculously easy. And that's what we're going to hope for you to get to. So I'm going to need to sign off here shortly. I'll wait to see if there's any. There's a little bit of a delay. If there's any other questions, Devyanish, thanks. Amazing how the world is getting smaller. These are the biggest, deepest, fastest markets in the world, and what a great thing! It's a beautiful thing. You trade these markets, you can trade anything. I'm going to say thank you, and in a few short minutes we'll have to sign off. But thank you very much.